Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we are focusing on one exciting semiconductor company. As you know, the semiconductors have done absolutely amazing job basically in the last 6 months, or even if you look at it for the 1 year, these are the semiconductor companies. So we got the semiconductor equipment, which is where we're looking at today. You've got also the actual semiconductors. So these are the companies that actually design, these are the companies that, you know, do the testing and all of that stuff. Then you've got ASML and then Taiwan Semiconductors and so on, that you have the equipment side of things. So they've done absolutely amazing job. Look at Nvidia, 141% for basically for the 1 year. The Broadcom, for example, has 76%. AMD haven't done amazingly, so 37%, but that's huge again. And, you know, Qualcomm 48%, almost 49%. The Texas Instrument, again, another company that has not done much, but you 23%. If you get 23% price appreciation every single year, that's absolutely amazing. But we have also companies like Intel, unfortunately, that's down about 41%. So in this video, I want to focus on the semiconductor equipment company, and the company that we're looking at today is called the Lam Research. And before we look at this company, I just want to mention one thing, okay? So yesterday, they, you know, when it comes to the S&P, when it comes to the earnings of Nvidia, yesterday they reported, and if you listen to the basically the, you know, CNBCs and everybody else or Wall Street prior to Nvidia reporting, everybody said if Nvidia reports and Nvidia goes down, the entire market will go down with it. Now there are a couple of companies that are down. Qualcomm's down about less than 2% and Broadcom about less than 1%, but the rest of the chips has actually done all right. There's, you know, the other companies have gone up. It has not impacted the entire market basically. And right now, because Nvidia is becoming huge, as you can see here, the size of it, okay, is equivalent of all of these companies here. People think that because, you know, because it went down 6%, it's going to take the whole market down. So don't pay attention to the day and, you know, the quarterly earnings reports and all of that stuff. Focus on the long-term goal, because it is really important that you focus on that, because you can potentially sell all your stocks because Nvidia is down 5% and people get stuck, you know, getting scared and whatever. I had a conversation with a friend 2 days before it reported, and he was adamant if actually Nvidia goes down a lot, then we will take the rest of the market down, because that's what it's been doing so far, the opposite direction. When it goes up, the rest of the market goes up, but when it went down, the rest of the markets were absolutely fine. So just bear that in mind when you're actually doing some analysis or whatever. But look at this, by the way, this is very interesting. Look at it, both up 1.91%, which is absolutely crazy. MasterCard and Visa. Anyway, let's get to the video. And before we do that, if you are enjoying this type of content and you like what we're doing here, you like the transparency and everything else, please join us on the Patreon account. Let's do this now. And also, by the way, if you have not liked the videos, that's the list that you can do. As you can see, in Lam Research is actually up 16% for the 1 year. Year to date is only up 1.8%. For the last 6 months, is down 15%, which is absolutely crazy. So knowing that as the, you know, the Nvidias and everybody else has been up, you know, over 200%, this company has not actually participated. And when it comes to the forward PE, is only 22%. So that's what got me interested. I was like, okay, let me have a look at this company and see what we can find out about it. Okay, now I'm gonna go through the financials. This is one of the equipment semiconductor equipment companies, so they don't actually make the chips, okay, that we're talking about here. So let's talk about what the company does. So we've seen a processing equipment used in the fabrication of integrated circuits. That's exactly what they do. Currently trading $797 per share, EPS of 27 right now. EPS, so that is, okay, earnings per share of $27 right now. 103 billion, almost 104 billion dollars of market cap, which is a huge company. They have a wide economic moat, and the beta is slightly high. Now that just means basically it's a little bit more volatile than the general market, so it doesn't actually track the S&P 500. It might be slightly bit more volatile when the markets are down. When the markets are going up, it's also basically that's the opposite as well. It goes up faster than the S&P 500. The PE right now is about 29, the forward PE about 22, and the 5-year average of 21. Now, if we look at the 5-year average, it's about 21, and like we look at the current, okay, that kind of gives us an idea. It is slightly more expensive than where it has been over the last 5 years based on the PE. Price to free cash flow is about 23, and the sector is about 22 small. So right now it's slightly higher than the sector. The sector is not just semiconductors, it's the information technology or the IT sector, and the S&P 500 is about 27 right now. Now, in terms of dividend yield, we're looking about 1%. So you got about $8 per share of every share of this company that you own. Payout ratio is very, very low, and the latest increase in the last 5 years is actually double digits, which is quite nice. Now, dividend streak is basically 10 years, so they've increased that dividend for the last 10 years. 66% safety. They've got $4.5 billion of free cash flow. The last 5 years, the compounded that free cash flow basically is 11%, which is nice. Free cash flow yield of 4%. Normally, we're looking for about 3%, and free cash flow margin of 29%, which is basically way higher than what we normally look for. It's really good. So in this side of things, absolutely nothing to worry about. Profitability, we look at profit margin, operating margins, and return on equity, doing absolutely amazing in that front. Return on equity 32%. Net income, the compound annual growth rate is about 6%. The total return in the last 10 years is about 28%. They grew that revenue about 6% compound annual growth rate for the last 5 years. When it comes to EPS, 16%, and current ratio is way above 1, 2.9, which is absolutely amazing. Growth estimate for next year, they're expecting about 28%, but the growth estimate for the next 5 years then is about 11%. Now, current price we've seen is almost $800 per share. Now, according to Morningstar, is $830 per share is their actual price target, which is interesting. Fairly valued right now, and then when it comes to Simply Wall Street, there is slightly overvalued, so they're saying 740 is where they think the price should be. Now, tip rank, and remember these two guys use the discounted cash flow models and so on. These guys are using basically what the analysts have said, can then give you sort of an average of what the analysts are saying, and the next 12 months they're expecting the price to be in the 1,000, okay, and then also same goes for average when it comes to average price from Seek and Alpha. So 37% upside, 31% upside, both a buy, but this one is a moderate buy. Now, in terms of Sharia compliance side of things, absolutely nothing to worry about. 99% when it comes to the business activities, 4% when it comes to interest-bearing security in debt, and 4% when it comes to institutional securities. Now, when you look at their shares outstanding, you can see they're buying back their own shares, which is quite nice, and they have been doing that for the last few years. Very stable business. They're buying back their own shares. They're giving you some dividend. They have excellent free cash flow. The business is growing. So let's have a look at a few things. I want to look at the financials, because there are other things that we need to factor here. We need to make sure that this revenue is actually headed the right direction. And from 2015, they were making about $2.9 billion of 5.2 in terms of revenue side of things. That became 5.8, $8 billion, $11 billion. 9 dropped to 9 in 2019. Then 2020 about 10,000, 14.6 billion, 17.2, 17.4, 14.9. Again, drop in 2024, and that's where we are right now. Okay, and as you can see here, the basically the expenditure is actually quite high as well for this company. As you can see, the gross profit is about $7 billion right now, which is not bad. So they're making about 15, taking home about gross profit of $7 billion. They, of course, they're doing some research and development side of things. They're basically selling general and admin costs and all of that. When you add all of that together and then basically pay some taxes, the net income they've taken home $3.8 billion, which is quite nice. And the free cash flow we've already seen was, I think, $4.something billion. There you go, $4.5 billion of free cash flow. So absolutely nothing to worry about. Is in terms of the net income is really good. The business is growing, and of course EPS is also heading the right direction, I believe. So if we look at it here, the basic EPS from $4 to right now $29 per share is basically what we've already seen. So amazing. In terms of that, there's nothing to worry about. The valuation is the most important part. So what I've done here is I've used basically the Morningstar valuation, Seek and Alpha, Simply Wall Street, and then I used the multiples valuation comparing with basically these other companies that are in the same sector. So we're comparing with Applied Material, we're comparing with KLA as well as Teradyne. If we do that, okay, we get a valuation of $950 per share, and then dividend discount model has given us $864 per share. Average all of that out, you got $922 per share. Current price is almost 800. That gives you about 16% upside from where we are. Then you might say, you know what, this company is very volatile, I'm just gonna save myself some headache and basically have a margin of safety of 15%. Okay, and if you do that, okay, then we are heading this a bit. So as you can see here, if you do that, you get current price of 797. Basically the buy price is 784, so it hasn't hit that target. So for that reason, it's undervalued, basically still undervalued based on that. And you can just, of course, that you can tailor this. You can make it 5%, you can make it 10%, whatever basically works for you. And it's really important that you do this because you never know. For me personally, Morningstar valuation is perfect. Take 10% off that, then go with that, because that's what I normally tend to do always. I just do, of course, I do my my research and so on, but at the same time I use Morningstar because I feel like they have a bit of a margin of safety than the other companies that don't offer. Simply Wall Street, I found it a little bit more strange because some companies they overvalue, and I'm like, where are you getting that information from? But Morningstar found them really good, like in terms of using them over the last 5 years. I found them really the best in terms of valuation side of things. And again, they could be wrong, they are just an analyst, and depends on what the information they're using and so on. So anyway, that's what I wanted to share with you guys. I hope this kind of content is actually helping you. If it does, please let me know. If you own this stock, let me know. If you're interested in the company, also put it on the comment section. Now what we're going to do is now compare this company, okay, with this like for like. So the companies that I've talked about earlier. And what we're doing is we're looking performance, and we're looking at the total return, so including dividends, and we're going to check the last 5 years, sorry. And as you can see, Lamb Research is about 309, S&P 500, so we beat the S&P 500 basically 91%. KLA 480, so it's done better than us. Applied Material 327, so again slightly lower, and Teradyne basically 160%, but they still, all of them beat the S&P 500. However, these two are more or less basically similar anyway. So last 10 years, 1000, or let's call it 1200, 180, 1400, 876, and 611. So again, if you own this stock for the last basically 10 years, imagine you just dollar cost average, you bought this stock, you left it alone, you'll be up right now over, when it comes to total return, that is including dividends and so price appreciation, 1191%, which is absolutely amazing. Now I don't own this stock. I was very interested at one point. I am interested now. I do have other semiconductor companies like Broadcom and so on. So I will be definitely looking into it. And I like the business model. I like KLA as well. So I will be doing. If you want me to do actually video, let me know on KLA, because they are very, very similar. They're in the, and even maybe we'll do all three of them, and then we'll pick all four of them, and then basically decide which one we actually think will probably be better. Let me know if you want that. Inshallah, I can put that video together. The work is been really busy, but I'm going to do my best, inshallah, to put a few more videos out in the next few weeks. I hope basically you're enjoying the content. If you are, just put that click that like button, subscribe to the channel, join us in the Patreon account. Genuinely appreciate all your support. Have a wonderful day. Assalamu Alaikum.